Welcome to Mindnificent. In today's video, we're exploring 10 assets that are making people rich over time. Click that subscribe button if you want to be smart with money and learn all the things about getting rich. Are you ready? Let's get into it. Number 1. Cash. You may think cold hard cash stored under a mattress somewhere is a terrible idea. Well, you'd be right. If you have a whole heap of real money, putting it in a bank savings account is the very least you can do. But even then, at an average 1% interest, the extra money you'd earn wouldn't even keep up with inflation. The reason why the rich and wealthy always keep a large stash of cash in their portfolio is for two important reasons. The first is that a liquid amount of cash means you can take advantage of opportunities at short notice. How many investment opportunities do we pass on because we're low on cash, only to kick ourselves later? The second is the cash price advantage. Many retailers and institutions offer sizable discounts if the buyer can offer cash, making many items much cheaper. Number 2. Real estate. It's the investment that's been generating income and building wealth for thousands of years. Owning land and the buildings that live on top have always been a lucrative investment. Not only does land and real estate heft against inflation, it can do so despite its depreciating condition. There are thousands of stories of dilapidated houses in in-demand areas selling for millions of dollars. Then there are the opportunities for ongoing income streams. In some areas, rental prices can rival if not exceed your mortgage commitments, if you even have one to begin with. Sure, it can be a nightmare dealing with maintenance, property taxes, tenants, and property managers, but the financial incentive more than offsets the inconvenience of a few grumpy renters. Number 3. Stocks. Stocks have traditionally been seen as the rich man's investment, and they easily represent the bulk of most of the richest people on the planet's portfolio. They've also, historically speaking, been one of the most reliable ways to create long-term wealth. Maybe that's a little counterintuitive based on the stock market's notorious volatility, but the few crashes we can remember are easily offset by decades of strong growth and lucrative dividends. Stocks are quite literally part ownership of a company. When a company goes public and trades on the stock market, individual shares can be bought, sold, and traded to generate capital for the business. As the company trades, a portion of the profits are paid to shareholders as dividends. More importantly, stocks are an amazing investment because they require no ongoing maintenance on your part. You reap the rewards while someone else, i.e. the company, does all the heavy lifting. Number 4. Cryptocurrency. If you thought the stock market was volatile, wait until you step foot into the hysterical world of cryptocurrency. The digital currency built upon blockchain technology has quickly solidified itself into a serious and reputable form of financial infrastructure, one that has grown into a $2 trillion industry in less than a decade. While it's got many critics, the cryptocurrency ecosystem has matured into something way beyond just sending anonymous digital money. The crypto market is notoriously volatile, and extreme caution is offered to any novice trying to understand the vicious ups and downs of exchanges. In saying that, some crypto investors have managed to make eye-watering gains off of even modest investments. There are now more than 85,000 Bitcoin millionaires in the US alone, up from 15,000 just a few months ago. With the right knowledge, experience, and a bit of luck, crypto is making ordinary people very rich. Number 5. Bonds. When compared to the white-knuckle ride of the stock market, bonds can seem like a relaxed, calm breath of fresh air. Bonds are loans made from an investor to a borrower to be paid back over a certain period of time or in agreed installments. The borrower can be a person, a business, or even a government agency. People prefer bonds due to their predictable and fixed returns and the fact that bondholders are paid before shareholders if a company is liquidated. They're also shielded from a lot of the volatility in the stock market. On the flip side, money locked up in bonds are notoriously difficult to access, making liquidity an issue. As bonds are tied to interest rates, any rate fluctuation can affect the value of the bond as well. All in all, treasury and private equity bonds are used all the time by large, rich investors who understand that a steady stream of predictable passive income is a smart move. Number 6. Mutual and index funds. It's fairly common knowledge that the secret to protecting your investments against unforeseen market fluctuations is to diversify your portfolio. Spare a thought for the investor who held nothing but blockbuster shares when Netflix came along. One way to diversify your portfolio is with mutual and index funds. A mutual fund gathers money from many other investors and carefully chooses a range of things to invest in, be it currency, stocks, real estate securities, or other alternative investments. Likewise, an index fund is a portfolio of stocks and bonds set up to match the risk and return of the market. Both of these funds rely on the theory that in the long term, the market will outperform any single investment. They're preferred by rich investors as they are funds managed by expert financial planners, can cover anywhere from 50 to 200 different securities, and dividends can be automatically reinvested. Some of the big players in index funds include the Nasdaq, Dow Jones Industrial Average, and the S&P 500 Index. Number 7. Gold. Gold may sound like a strange asset to invest in, but there's a very good reason why many of the world's richest people have gold as part of their investment portfolio. For starters, gold is seen as a deflationary asset. That is, it increases in value as inflation devalues a particular currency. This is because of its limited supply. Scientists believe we've mined around 190,000 tons of gold from the Earth, with around 50,000 tons remaining. When that's all gone, the price will inevitably rise as demand outstrips supply. There's also over 100 years of price data confirming gold's ability to retain and increase value over time. Number 8. Patents, trademarks, and royalties. Moving on to some of the more lucrative investment assets, we now venture into the world of inventors, artists, creatives, and marketing gurus. Expressing creative and intellectual property can generate ongoing financial benefits for those whose ideas and creations take hold. When the Hill Sisters first wrote the lyrics for the ever-popular Happy Birthday song in 1893, they had no idea how much their kindergarten ditty would eventually be worth. In 1991, Warren Chappell bought the rights for $15 million and to date has received well over $50 million in royalty payments whenever the song is used commercially. Amazon patented the one-click terminology and phrasing, and this patent alone was estimated to generate over $2.4 billion every year. Likewise, trademarks are synonymous with driving royalty payments in your direction. Have a song, piece of art, or a cool slogan? Make sure you protect your creative or intellectual IP and make sure you're ready for the monetization opportunity. Number 9. Reputation. This next asset is a little vague and hard to quantify, but it clearly has a dramatic effect on wealth creation. In any kind of business, it's not about what you know, it's about who you know. The right connection or the right hookup can propel financial opportunities in your direction. But it's not just about your little black book of network contacts. Commanding respect and having a reputation as a savvy, informed investor can open untold doors for you. You're often the first approached when exciting new ventures are born. Number 10. Time. By far, the most valuable asset anyone has on this planet is time. Poor people spend their entire lives trading their time for money which barely covers their needs when they aren't working. Rich people find the boring, time-consuming tasks in their life and pay someone else to do it. The logic behind this is a rich person's time is better spent doing other things, in which the result will mean vastly more wealth. If you can earn $50 per hour, it makes sense to hire someone to clean your house for $15 per hour if it frees up your time. In essence, you're just buying yourself more time, which at the end of the day is priceless. That's all we have time for today. Do you hold any of these rich people assets? If you enjoyed today's video, please let me know by clicking the subscribe button and bell notification button because more magnificent content is on the way. Thanks for watching, and I'll see you in the next video.